What is going on, everyone? I hope you are all having a fantastic day. So, as we've discussed in past videos, wanting to be financially independent as a teenager can be incredibly frustrating because there are so many laws and regulations around what you're able to do as a minor when it comes to opening bank accounts, investment accounts, and really anything that has to do with your personal finances. But at the same time, when it comes to investing in particular, starting at a young age is really crucial if you want to reap the long-term benefits of compound interest. I mean, pushing off your investing journey even just 1 year could make a several $100,000 difference down the road. So how can we navigate all of those rules and regulations? Well, thankfully, you are not completely out of luck, so today let's talk about some of the best investment accounts and investment options for teenagers who are under the age of 18 so that you can start your investing journey as soon as possible and start going after your financial goals. All right, let's jump right into it. So just like it is with bank accounts here in the US, you aren't legally able to open an investment account on your own with just your name as a minor, which can be really frustrating, and I totally get that. But there are a few ways that we can navigate our way through these rules and regulations. So first, let's talk about the type of account that you want to be looking at, and then we'll take a look at some specific companies that are offering some fantastic investment account options for teenagers specifically. So right off the bat, I just want to get this out of the way. Your best bet when it comes to opening an investment account as a minor here in the US is using what's called a custodial account, which is essentially an account that your parent or guardian can open on your behalf, and then they are able to gift you money that can be invested in stocks, bonds, mutual funds, ETFs, and a ton of other kinds of investments. Now, I use the word gift here because currently your parent or guardian is able to contribute up to $15,000 per year to a custodial account without having to pay what's called a gift tax on that money. Now, by no means am I saying that it's normal for your parents to just gift you $15,000 because that is absolutely not the expectation at all. But what I am saying is, say you have $1,000 that you're ready to invest. Well, you can give that to your parents and then they can gift that back to you in the form of putting that in your custodial account and investing that money. Now, I know that it's a bummer that you have to have someone looking over your shoulder, but again, these rules and regulations are in place for a reason, as much as you probably don't want to hear that. And as frustrating as that may be, at least you still have the option to have an investing account. And I do want to make it clear that the money that is in this custodial account is yours, and the day you turn 18 or 21, depending on where you live, that money will basically be transitioned to a regular investing account automatically, and it will be yours to keep. Now, I don't want to go too in-depth with this custodial account thing because I do want to spend some time talking about the best specific account options and investment options as a teenager, but I will make a completely unsolicited suggestion here that is absolutely not financial advice and is strictly for entertainment purposes, that if I were a teenager who was looking to open one of these custodial accounts or was talking to this with my parent or guardian, then personally I would use what's called an IRA or an individual retirement account. And specifically, you'll want to look at what's called a Roth IRA. Now, this video is not about the Roth IRA, and I have done an entire separate video on why this account is probably the best option for you as a young investor. But long story short, by using a Roth IRA at a young age when you're not making that much money, you're going to be able to reap some serious tax advantages down the road when you go to withdraw this money in your retirement. So again, if you are considering a custodial account, then just keep in mind that you can open an IRA within your custodial account. But again, that's just a suggestion and is just for entertainment purposes, of course. Now, for those of you who are wondering, unfortunately, there aren't really that many other options as far as legitimate investment account options if you are a minor. But there are tons of benefits to you starting your investing journey at a young age and really as soon as possible. And I'm sure that with a little bit of research and a solid pitch, you'll hopefully be able to convince your parent or guardian to open one of these accounts in your name. Alright, so assuming you're able to navigate that tricky conversation with your parent or guardian, what are the best custodial account options on the market currently? Well, pretty much every major brokerage probably has some kind of custodial account option. So if your parent or guardian already has their own investment account, then I might just start by looking at that company and see if they have a custodial account option, since that's probably going to be the easiest pitch and easiest for everyone involved in the process. However, if you're starting with a clean slate, then in my opinion, there are 3 companies who have really taken their custodial account features to the next level that will probably be the best option for you in the long term, even when this does become your own investing account. So the first option for an investment account as a minor would be the custodial account through Charles Schwab. Now, I'm sure you've heard of this massive company company before, and I have done an entire separate review on all of their investing tools, so definitely check out that video if you want some more in-depth information. But the custodial account from Charles Schwab is going to give you access to a really wide range of investments since they are such a large company, and they have no minimum balance requirements when you open this account, which is really important when you're just getting started, and they have no monthly fees, and just like many of their competitors, they have recently transitioned to a $0 commission model, meaning you pay nothing when you buy and sell a particular asset, such as a stock. Charles Schwab also gives you access to their vast network of mutual fund options, including some awesome target date funds, which are a fantastic way to passively manage your risk and plan for your long-term financial goals. Now, this Charles Schwab custodial account is going to work in the exact same way as a regular investing account, so there's no strings attached and nothing to worry about there, and your parent or guardian is able to manage this account from their own Charles Schwab account if they do have one of those themselves. So this is really just going to make the entire process more seamless and easier for everyone involved. The next investment account option for minors is from a company that is near and dear to my heart, and that's because this company was actually where I had my very first investment account, and that would be TD Ameritrade. Yes, that's correct, a 15-year-old and rather awkward version of myself handed over all of my Christmas money to my dad, and he purchased 2 shares of Disney stock in my name, and man, did I think I had my whole life figured out. Okay, but seriously, the reason I include TD Ameritrade on this list is because they actually have some of the best college savings options, specifically when it comes to custodial accounts. Now, I do want to make it clear that they do market this as what's called an educational savings vehicle, but this custodial account does not fall under the same restrictions or category as what's called a 529 college savings plan, meaning these funds do not necessarily need to be used for college. So if you wanted to use this as a regular custodial account, just like you would with Charles Schwab or any of the other options that are currently on the market, then you absolutely can do that. They have no minimum balance requirements, $0 commission trades, and they give you access to some seriously powerful investing platforms like their Thinkorswim investing research tool. Alright, so both Charles Schwab and TD Ameritrade are going to be fantastic options if you want a custodial account that's more mainstream with a large and reputable company that I'm sure your parent or guardian is probably familiar with. But the third investment account option for custodial accounts is going to be slightly less conventional, but in my opinion is probably the best option, especially if you are looking for a more passive approach to your investing. And that would be the custodial account option from Acorns, which, if you're not familiar, is an incredibly popular passive investing platform that allows you to automatically invest your money in a catered, diversified portfolio. Now, just like all of the other platforms that we've talked about today, I have done an entire review on the Acorns platform, so again, check that out if you want some more in-depth information. But let's specifically talk about their feature called Acorns Early, which is essentially their custodial account. Now, this account from Acorns is definitely marketed more towards parents who are taking the initiative to open and create an investment account for their children, but that does not mean that you can't pitch this idea to your parent or guardian, especially if they aren't a savvy investor themselves, because again, the Acorns platform is much more simple and is really going to automate the entire process for you. Now, just like TD Ameritrade, this account falls under what's called a UTMA or UGMA account, which is similar to a 529 college savings plan, but again, it is not restricted in the same way, meaning this money does not need to be used for educational purposes. Now, in order to access this Acorns Early feature, you will need to have the Acorns Family Package, which is $5 per month currently, but keep in mind that this allows you to have full access to their suite of investing tools, as well as Acorns Spend, which is a pretty cool hybrid bank account as well. So any of these companies would be fantastic options for your custodial account, but I think if I had to personally choose one, I would go with Acorns, especially if you are just getting started with investing, since again, this platform is really going to automate the whole process for you. I know it can be a huge bummer that you can't just go and open up your own investment account as a minor in your own name, but keep in mind that starting at a young age is extremely important, and even if you aren't necessarily able to just have this account in your name, the long-term benefits that you are going to see from investing in a custodial account from a young age is really going to be worth it in the long term. So let me know what investment account you plan on opening, whether that be a custodial account through your parent, or if you're a parent or guardian who is planning on opening your own investment account for your child. Even if you just invested $5 per day in this account from the day your child was born at an 8% annual return, that would make this account worth over $1 million by the time they are 50 years old. Because remember, compound interest and time are on your side. Regardless of which side you fall on, thank you so much for checking out the video, and if you did enjoy this content, it would mean a lot to me if you would hit the like button, subscribe to the channel, and share this video with someone who you think would get value out of this content as well. As always, thank you so much for your time, take it easy, and I'll see you in the next one.